All right, ladies and gentlemen, it's time for our quick end of day report. We're getting ready for Take Back Friday. It's been an interesting week, but at the most part, things are still the same. Take a look here at the Bitcoin futures. You notice we're still in that neutralized zone. All right, so nothing's really going to happen in this market until the market comes out of this neutralized zone, and then we'll see what happens. But you have moved into a bull market, and you have a bullish trend momentum reading with a neutralization bar, which means that when it comes out of neutralization, it can go green or it can go red. All right, like you did back here. You were green coming into it, and then it went red when you came out, and price action went the way it went. So heads up going into the weekend. I don't expect anything to happen unless some news drops. Here is silver futures. We're in a bull market with a bullish trend momentum reading. So we just hit a new weekly high. So all things are pointing toward that $25 initial target right there. That's the old resistance area. So I think that's where the market's going. And if it can get a close above it, then we'll be off for the races in silver. Next up, we have nat gas. Nat gas is still locked in a bear market and hitting new fresh lows on a weekly basis with crash alerts. This one's not done yet. I think it may go to around $1.50 before it's all said and done, maybe even a little lower. Ouch. Looking at the Dow. Okay, so the Dow is still in a bullish configuration, but it has a bearish trend momentum reading. So it has not been allowed to act like it's in a bull market. It's just in a bullish zone, but it's not trending like a bull market. No matter what they tell you on TV, when they say, oh, we're now in a bull, the equities are in a bull market. No, they're not. No, they're not. And they know that. All right. When they say, well, once the market's down 10% or up 10% or down 20% or up 20%, that's a trend. No, it's not. All right. This here, back here, was a bear market rally. And it stayed up long enough during the neutralization process to cross it over into the bullish territory. But we didn't go anywhere. And we haven't been anywhere since the market crossed from bearish to bullish. We've gone nowhere. How are you in a bull market? You topped out at the 35,000 zone, and now here we are at 33,000. All right. And before that, we touched 31,000. This is not a bull market. You've had a few days of it moving up, but don't forget this negative bot check, folks, is coming. All right. Maybe the market can get up to about 33.5, which is the bottom of the Kumo cloud resistance. But it's coming, folks. It is coming. This bot check will be reconciled. All right. It's going to happen. The bot checks don't lie. A down move is coming. A down channel is coming, and it could be quite a doozy. So just FYI moving forward. All right. All right. I see you want to know, what do I think about bonds? Okay. Well, let's take a look at TLT and see what's up. All right. TLT. Here we go. And let's see what say if the tea leaves on your bonds. All right. So bonds are in a bear market with a bearish trend momentum reading. All right. Which means it's locked in the bear market. So the market is in sell the rally mode. All right. The bot check before this one was back here. Market faked a few people out by hanging around. And then here came the drop. Got a bot check now. The market's been hanging around, but that down leg drop is coming. All right. It's going to drop back down below $100 in this next leg down. So nothing has changed. Bonds are not in a bull market. Bonds are in a bear market with a bearish trend momentum reading, which means the market is locked in. That means the market is in sell the rally mode. All right. So that's what we are right now. All right, I'm gonna hook you up. I'm gonna hook you up. I will get to everything as we go through these chart segments. All right, so bonds, bear market. That means that the bond prices are going to fall. And I think the next leg down will start to come down here and take out the 52-week lows. Your overhead resistance area, the market keeps pulling further and further away from it. And that's right here at around that 110 level. All right. So the market is bearish for bonds, no matter what they tell you. That means interest rates have no place to go but up. All right. You can't start lowering rates in a bear market for bonds. When bonds are in a bear market, interest rates explode. When bonds are in a bull market, interest rates collapse. It's just how it is. So this is telling you that there's nothing they can do to stop this train. We have been in a banking crisis since 9/11. And technically, if you want to be really technical about it, we've been in a banking crisis since 1994. All right, it's been perpetual. It's not stopped. It's only gotten worse. For the last 20 plus years, the Fed has done nothing but print money. Print, print, print. You cannot print your way out of debt. How is that even logical? It defies even the laws of physics. It doesn't make sense. You cannot dig yourself out of a hole. You can only climb out of a hole. If you keep digging, you only make the hole deeper. You don't dig your way out of a hole. Okay? You climb out of a hole. That's how you do that. Same thing with this printing of money. You don't fix the economy by adding more debt to it. Every dollar that is printed has $1 of debt associated with it. So for every dollar of money printing, it has $1 of debt attached. So if you print $1, you owe $2. The Fed has printed trillions upon trillions upon trillions upon trillions of dollars. So for sake of argument, if the Fed has printed $1 trillion in the last 20 years, that means there are $2 trillion in debt. But the Fed has printed tens of trillions of dollars, maybe even hundreds. So we're looking at like $1 quadrillion in global debt. And sorry, you can't prosper with debt. If you make $100 a month, but your bills, including your rent and utilities and gas and everything else, is $1,000, and you keep borrowing, since you only make $100 a month, you borrow the additional $900 every month. You borrow $900 so that you can make that $1,000 a month nut that you got. What happens at the end of a year? You're over $9,000 in debt. And if you continue to if you continue to get a loan and borrow money every month forever, eventually you're going to be under such a mountain of debt, you will never be able to pay it off because you only make $100 a month. But your expenses are $1,000 a month. And every month you borrow $900. So you put the 900 with the 100 you make, and now there's your $1,000, right? And you continue to do this. So you're borrowing $9,000 a year, and you only make $1,200 a year. So you're basically borrowing 10 times your income every year. 10 times your income every year. Some people work for 20 years and retire, some 30 and retire. That adds up exponentially. That's a lot of money. There's no way you can pay that money back. What happens when a person's liabilities exceed their assets? We call that person bankrupt. We call that person insolvent. All right? indigent because your liabilities far exceed your assets. You're bankrupt. You don't have any money. That's what you call it. So how is it that the U.S. government and the Treasury and the Federal Reserve can print trillions of dollars of debt annually for over 20 years and not have any ramifications or repercussions? If you look at the amount of income that the United States generates, look at its GDP and look at the debt to GDP, there's no way a country like that can make it. Nah. You can only kick the can down the road for so long. Eventually, you won't even be able to make the interest payments. It'll be too much. You're bankrupt. That's what this bond market is showing you. So let that sink in and marinate for a while. That's the truth about the banking crisis. All right? And it was done on purpose. It's not an accident. It's not a mistake. Remember, they want to do away with the current system so they can bring you the new system. All right, so here's the NASDAQ 100. You see where we've crossed over from bear market to bull market, and you got a bullish trend momentum reading. So the NASDAQ now is in a position to rally. All right, it's in a position to rally now. Taking a look at the other indices, though, they're not doing so well, right? What's going on here? Something's not right. Here is gold. Gold is still neutralized. You're in a bull market with a bullish trend momentum reading now, which is good, but now you're neutralized and you don't know what's going to happen when you come out of the neutralization. Is it going to go green or is it going to go red? Not what you want to see up here at these new high levels. I've told you before, gold historically has had a problem with the $1,900 area, FYI. All right, S&P 500. Bear market, bearish trend momentum reading. All right, still can't go green. It's still in the red. It cannot go green. That's a problem. Overhead resistance at 4,200. That's a long way up. And you got another negative bot check back here. And look how long it's been able to hold up. But eventually this negative bot check is going to play out and it's going to be nasty to the downside. Next is crude oil. Crude oil's in a bear market and it now has a bullish trend momentum reading. The rally is almost near the overhead resistance zone. I told you resistance zone is from $75 to $80, corresponding with the Kumo cloud. And if the market can get up and above that, then it can really have a really nice bear market rally. But right now, this is nothing more than a bear market bounce off of the 52-week lows. It's a technical bounce. It's not really a bear market rally until it gets above the Kumo cloud. Then you start saying bear market rally. All right, but as long as it's below the Kumo cloud, it's not a bear market rally. That's just a technical bounce. Next up is your Russell. So the Russell got into that bull zone, couldn't hold it. Now it crossed over into the bearish zone. It's bearish now, but it has a bullish trend momentum reading. So it's trying to give you a technical bounce off the support lows and trying to get bullish, but it has a long way to go. It's nowhere near its overhead resistance, which is between the 1850 and 1900 zone, which corresponds with the Kumo cloud. And then beyond that, it has to get way above 2000 to even get back into the game. That's the overhead resistance zone. The market's so far away from that, I just don't see how it can overcome all of that with all of the economic calamity in sight. I just don't see it. Next up is the US dollar index, which is in a bear market with a bullish trend momentum reading. And you just had a positive bot check yesterday. So it's only a matter of time before you see an upside explosion in the dollar. So be careful. All right. Until this line turns red, there is a danger of an upside explosion. And we know this because you got a positive bot check. All right. Next up is Ethereum. Ethereum, just like Bitcoin, consolidated up here, neutralized. All right. Don't know what it's going to look like when it comes out of the neutralization. Will it go green? Will it go red? Hard to say. Right now it's neutralized, and we just crossed over into a bullish configuration. So you switch from a bear market bias to a bull market bias, but you're neutralized at the moment. So there's nothing to do until you come off the neutralization. So we'll find out more on Monday with Bitcoin and Ethereum. All right, and that's it, folks. So there you have it. That's the skinny on what's going on. We are not out of the woods, not by a long shot, with the whole banking crisis. It's just not out of the woods yet. No matter what they tell you, no matter what they talk about on the mainstream news, we are nowhere near being done with that. All right. The next shoe will drop eventually. So in the meantime, smash that like button. Remember, the system works if you work the system. So make money, not excuses. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button, subscribe, click the bell icon, and have yourselves a great weekend. Peace.